Hello everyone, here are the latest market news on December the 10th, 2020. Facebook may be forced to sell WhatsApp, Instagram. The U.S. Federal Trade Commission, together with authorities of 48 states, filed a class action against Facebook. The regulator accuses the company of violating antitrust laws and asked the court to order the social network to sell Instagram and WhatsApp. He believes that their acquisition was illegal. The FTC statement stressed that the claims against Facebook were the result of a lengthy investigation in cooperation with a coalition of regional general prosecutors. Facebook bought a WhatsApp Messenger for $19 billion in 2014 and Instagram for $1 billion in 2012. The company said it is currently considering claims for the FTC and antitrust authorities, saying that this is an unprecedented lawsuit from the regulator. Airbnb raises stock price for biggest IPO in U.S. Airbnb Inc. said late Wednesday that it would sell its initial public offering shares at $68 per share, above its target price range, to raise about $3.5 billion. The IPO gives Airbnb a fully diluted estimate of $47.3 billion, which is a turnaround for the U.S. rental company, which has been hit hard by the travel restrictions used to contain the COVID-19 pandemic. The company planned to sell about 51 million shares at $56 through $60 each, raising this range from its previous target of $44 through $50 each. IPO Airbnb is the largest IPO of an American operating company in 2020. The start of trading in the company's shares is scheduled for a Thursday at Nasdaq under the ticker ABNB. European stock futures fall, Brexit in spotlight. European stock markets are opening lower on Thursday as investors hold their breath as Brexit and the U.S. continue negotiations to stimulate the economy ahead of the ECB policy meeting. DAX's futures contract in Germany traded 0.2% lower. CAC 40 futures in France fell 0.1% and FTSE 100 futures in the UK fell 0.1%. Negotiations between British Prime Minister Boris Johnson and EC President Ursula von der Leyen ended without a breakthrough late Wednesday, confirming that very large gaps remain on issues ranging from the fishing to dispute resolution. They gave themselves up for the rest of the weekend to make a new trade pact. Meanwhile, U.S. lawmakers were able to approve an interim public finance bill on Wednesday, but negotiations for a broader COVID-19 aid package continued. S&P DJI to get rid of Chinese firms after U.S. ban. S&P Dow Jones Indices said Thursday it will remove Chinese companies, including Hikvision. The company will be the last index suppliers to do so after the Trump administration orders limiting the purchase of their shares. The joint venture said it will remove A stocks, H stocks, and ADRs of 10 companies, including Hikvision and Semiconductor Manufacturing International Corp, from all stock indices before the market opens on December the 21st. The executive order submitted in November is designed to deter U.S. investment firms, pension funds, and other organizations from buying shares in Chinese companies designated by the Defense Department as being supported by the Chinese military.